get your ass kicked at Jiu-Jitsu Wednesday. I certainly did get my ass kicked today. Although, I gotta say, sometimes I wonder about class. You know, I try to pay attention to what's going on, and I try to keep my eye on my opponents and stuff like that. And today we were working some really interesting stuff with side control. And it's one of those things that I need to work more on, transitioning from... I need to work more on all of it. What am I talking about? I'm still a white belt. But today was one of those fortunate days that I got to roll with a gentleman who is much younger than I am, but still, nonetheless, far more experienced and way better than I am, or probably will ever be, at jiu-jitsu. And so, I mean, this kid is so good that, like, they recently gave him a blue belt, but only because he became old enough to wear a blue belt. There's actually age restrictions on ranks, and in jiu-jitsu, at least in Brazilian jiu-jitsu. And so at a certain age, I think it's 17, if you've already pretty much earned it, you can move up to a blue belt. And they have you wear like a green belt or some shit like that. I don't know. Anyway, this kid, he's been rolling with adults for at least like 3 or 4 years, and the only reason he's a blue belt is because he's 17 years old. Otherwise, he should be wearing a brown belt. I mean, he is just that good. But anyway, I turned the wrong way, and he caught me in the head with a knee, and that didn't feel good. But you know, these things happen. We're not training ballet here, you know. But nonetheless, it didn't feel good. And so, but I managed to get through it, and I've been having a little bit of difficulty getting back up to speed. You know, it's like I'm starting to get a lot more compliments about my movement and my abilities and whatnot. But at the same time, I feel like I'm like kind of, I don't know how to say it, kind of plateaued a little bit. I mean, like I feel like I can move better than when I started, but I'm not putting in enough time every week for me to really feel the difference, I guess. I don't know. I'm kind of confused on the whole thing. Either way, I do feel like I am getting somewhere with it, you know. It's been a very excellent decision on my part to engage in it. And I mean, most guys my age, if you said, hey man, let's go learn jiu-jitsu, they'd be like, fuck you, man, I'm gonna go get a beer. Yeah. But I don't know, it's something that's been kind of calling to me my whole life, and so I kind of had to give in and give it a try, and here we are a year and a half later. I'm still rocking it, still enjoying it. Anyway, let's go ahead and throw down into a little bit of music. I do have several tabs open in the browser, but as usual, I haven't the slightest clue where I'm going to take you all today, but we're going to enjoy the ride. And as far as what to play, well, I don't know, man. I'm feeling some body count, man. I'm feeling body count. We played Ski Mask Way last time around. I don't want to like wear you guys out on anything in specific. Fuck it. No lives matter here on Coin Metal. And that was Surf and Slam by Suicidal Tendencies. And that was a little shout out to what was it? Yo KFC. Yeah, he said in the channel here that he grew up skating and surfing in SoCal. So figured give him a quick little music salute, you know. Because, I mean, ST is actually from down there, and, you know, they're all about the surfing and the skating, you know. Anyway, back on into crypto stuff. I gotta tell you, we did this really, really neat choke today. And I'm still kind of spun from it. My apologies on that. And so, anyway, as far as articles, I've been looking around and I've been seeing some interesting stuff going on out there with regard to regulation. And that's a common theme on this show. I mean, we try to keep people abreast of what's going on out there as far as the regulatory aspect of cryptocurrencies, because I think it is something that we should be keeping aware of. You know, whether or not you can actually circumvent the law or disregard the law in your doings, it does help to know that the law actually exists, you know? I mean, I think we'd all like to pretend that, you know, the 99% of the planet is a bunch of grandmas and grandpas that don't understand this stuff and will never get it. That's all bullshit. That kind of thinking is... It reminds me of Terence McKenna's description of some proto-Christian Gnostic sects. He was talking about how they specifically shied away from sexual acts that would result in children. Now, the reason being for this is, according to them, they were like bringing into the world a manifestation of the light, you know, and their whole mission is to gather the light, you know, but not bring it back into existence. And so, you know, by bringing a child into existence, according to them, they would be bringing the light, you know, from heaven back down to earth, and that would be not bad according to them. Anyway, what the point he was getting to in his talk was that this was a self-limiting ideal, that eventually they would just not exist. They're not procreating. They're not creating more adherents of this religion, and so they just peter out and die. Well, the same thing I fear is happening in cryptocurrencies. That for whatever reason, people stop mining or stop paying attention to things and whatnot, and it just gets away from them, you know. And I think that's sad, because over the longer term, if we aren't maintaining the ability to create new currencies, then what? I mean, it's only a matter of time then before we're back down to a monopoly of probably even fewer currencies than when we started. And when I say fewer, I'm talking about fewer than the national currencies that currently exist. You know, that will winnow it down to like Ethereum and Ripple and Bitcoin. You know, and all the rest of the cryptocurrencies. I don't know. I think Virgil will still be kicking around in the background there all the time, through it all. But that's just how I see the community that we're with. You know, and it is really funny. You'll notice that even Bitcoin and Ethereum are talking about privacy in their transactions like it fucking matters. And can you believe that shit? You know, how long have we been here? As far as I know, VergeDev has been at this about 3-4 years now. And, you know, it's like everybody else just like looks at what we're doing and like copies what we're doing and then moves on like they fucking invented it, or they made the fucking development or something like that. And it was bullshit. But if they follow us too far, they're going to end up into I2P, and they're going to end up into Tor. And then it's off to the races again, even with currencies as big as Ethereum and Bitcoin. And I think it's really kind of funny. And it's like, I can understand now why some Bitcoin people were looking at post SegWit Bitcoin as a altcoin killer. Because, when it comes down to it, if you can do atomic swaps between currencies, I mean, like, what is the use of maintaining the currency's blockchain except to retain maybe transactions of coins from other coins and their own? I don't know. It becomes kind of pointless then to maintain multiple chains, because you can just use them all as though they're one chain. So, like, what difference does it make if there's only one chain? And these people also do not seem to understand the concept of choice in this whole cryptocurrency thing. They think, okay, I'm smarter than you, so I get to tell you how to crypto. I get to tell you how to Bitcoin. No. That's not how all this business works. Because, see, if your shit is so exclusive that it becomes virtually useless to me and prohibitively expensive for me to use, I'm going to use another cryptocurrency. Do you see where I'm going with that? I can't mine profitably with regular hardware for Bitcoin, and probably not even Ethereum at this point. But that being said, if I wanted to participate as a miner profitably, I could look to other altcoins. And this again gives me the potential to participate again. Or, better yet, I could really study and learn how to hash a fucking Genesis block and write things like my own miner scripts and run at it that way. This whole ICO thing, I'm glad it's getting the kind of scrutiny that it is, because in all honesty, if it's backed by another cryptocurrency like Ethereum or Bitcoin or even Verge, as far as I'm concerned, we're talking about something that fucking quacks like a security and walks like a security and looks like a security. By all legal definitions, there's virtually no difference. But only because, again, it doesn't have its own native blockchain, its own native mining network, its own native wallet. Well, maybe it'll have some sort of native wallet or whatever. I don't know. Point being that it's not really a cryptocurrency in and of itself. And with that in mind, I see it as a short-term trend, basically. I think that there's going to be enough regulatory pressure, and there's going to be enough people saying, I can see the point. Yeah, I understand what you're saying there. That's probably a security. But on the other side of that, what we're going to see is all of the people that can actually develop software, they are going to go back to authoring their own altcoins. If they were doing that before. If they weren't doing that before, that's what they're going to start doing. And they're going to get off of this bullshit that they need to fucking coattail onto the value of another cryptocurrency or a fiat currency or a physical currency or what the fuck ever. They're going to give up on that ideal. And I think it'll be because of the lack of availability. It's like, okay, I've got a tablet, I've got a phone, I've got a desktop. And between those three things, I should be able to mine a currency. Either whether it's happening on my desktop, on my tablet, or on my phone. And so when we're talking about utility, this is one of those keys that makes choice a little bit easier for people. Of course, they have to know about it, and so you do have to put your knowledge and information out there. Some sort of commercial campaign or marketing campaign. YouTube videos and stuff like that actually suffice for these things. if you have a finished product, you can actually demonstrate it for people on a YouTube video, and then post links for it all over your fucking social media, and there you go. I mean, the bar for developing a community has been so lowered that there really is no excuse for bothering with the ICO process. There's no excuse for it other than fucking laziness and technical inability. And if you cannot mine, if you can't hash a Genesis block and create miner software and all that business, I don't want to give you my money. Because as far as I'm concerned, you're just a copycat. You're just jerking people off. You'll probably never make good on all the promises that you're making. So, it's just a waste of my time as far as I'm concerned as an investor. Now, if you've actually put forward the time and, you bought a URL and you bothered to author a decent website, it doesn't have to be all fucking, script laden and beautiful and moving, flashing shit on it. None of that shit interests me as far as your coin is concerned. What interests me as far as your coin is concerned is your fucking uptime. Are you having a lot of trouble keeping your coin up? That's probably going to be an issue, because I want to be able to transact in your fucking coin. So I need a dependable transaction network now, don't I? Number 2, do you actually have a community? Is it just you and maybe like one or two other friends and some people that like to jerk one another off in the Telegram room or the Discord or IRC or something like that? Do you actually have a community? Do you have people that are mining your coin, that are talking to one another in these social media outlets? Are you bothering to develop your coin? So like I'm saying, it's not the packaging that I give a fuck about. I don't care about your presentation material. I mean, a decent white paper helps, okay, but it's what you do, not what you say you're going to do, not what your plans are, what you actually do. How often are you making commits to GitHub, and are they necessary? Are you doing so reactively? Are you doing so proactively? What's going on there? I think these are the points that a lot of people have drifted away from. It's like we also drift away from certain vocabulary. Like, you hardly ever hear anybody talk about a central point of failure. But you do hear them concede to things like, well, Lightning Network might be highly centralized. Okay, I thought we were trying to get away from centralized third-party arbiters. But that seems like a migration right on back to that. So, why is it when I ask questions about that, I get blocked on Twitter? When I ask things like, so, do you have in mind some specific party to do things like transactions? Is it going to be like a Wonderbutt instant messaging application, or is it going to be like, how is it going to happen? How is this transfer going to take place? And I'm sure it's been answered a million times. But as far as like, when I ask these questions, I don't get people actually posting to me anything but a few materials over and over and over again, and they're always from the core website. It's not like I'm getting specific like Reddit conversations that have already addressed this, and so it's like, am I the only person asking these questions, or is it that you're deleting everybody else's questions when they ask this, and blocking them on Twitter and shit? What the fuck? Why are you doing that? See, I came to another had a little flash of Satori kind of thing going on. You know, a little light bulb went off in my head, where consensus, as Satoshi Nakamoto meant it, was not... basically, it was finding a solution that 95% of us could agree on, that we didn't feel too bad about. And that whole ethos is completely been abandoned in Bitcoin, as far as I can see, on the developer end. As far as the miners go, they're holding true to it seems to me. But it seems like the devs have like this top-down idea where, you know, it's like, oh, what? You don't want to agree with us? Fine, go do something else. It's like, who the fuck are you? Who made you god of crypto? It certainly wasn't Satoshi Nakamoto. I never got an email from the man saying that, you know, I need to honor such and such person as god of crypto, and I need to regard what they have to say as equivalent to Satoshi Nakamoto. And fuck you. You're nobody. I don't give a fuck if Satoshi Nakamoto himself actually did email me and say, I need to regard these people as the leaders of... Fuck you. You're nobody. You write some fucking code. Good for you. Thank you. Really appreciate your efforts. But I'm not going to defer to you like you're some sort of god. You know, if you say to me, oh, everybody's got to go SegWit. Fuck you. Who the fuck are you? It doesn't seem like the miners are following along with you. And they're the ones actually doing work here. I mean, writing code and testing it, yes, it's very, very difficult work. Not everybody can do it. Not everybody does do it. I understand this. However, the people who are actually dedicating electricity and whatnot to implementing the software, they aren't necessarily doing it, and they're not actually committed to do so. There's no contract. There's no law that says thou shalt run core 0.15.1. There's no decree like that, so fuck you. Anyway, let's get into some articles here. And the first one I'm going to read, it's kind of interesting that we should see these kind of articles after the implementation of SegWit. And I've kind of I've tapped on this a couple times, but I think it does bear enunciation because I'm not really seeing it elsewhere. But here it is. It's on Cointelegraph. This was by Darren Pollock. Clearly, penis. Bitcoin bursting with potential, says billionaire Jeff Epstein. And this was authored approximately 12 hours ago, according to Cointelegraph. Jeffrey Epstein is seen as royalty when it comes to the elite of finance, having been a billionaire for over 20 years. However, despite his traditionalist ways, the former partner at Bear Stearns has weighed in with his opinion of Bitcoin. Epstein excelled at finding hidden value for his clients and himself, identifying anomalies in the market and using arbitrage to profit from them. He has now identified Bitcoin as another potential opportunity. Why does Epstein's opinion matter? There are a lot of Wall Street bankers, and investors who are sharing their opinion on the digital currency, some more politely than others. Jamie Dimon has called it a fraud, and on the other side, there are rumors that Goldman Sachs will begin direct Bitcoin trading. However, these opinions are so polarized that they are either so deep in one camp or another that they seem to have hidden agendas. Epstein's opinion is fairly measured as he points out its potential, casting his math, science, and technology background over it with a focus on finance. Quote, Epstein is the Brooklyn-born financier who in 1982 formed J. Epstein & Co., the money management firm that famously held a secret client list containing only the names of people worth $1 billion or more. Mathematically stopping counterfeiting. As a former math teacher, Epstein appreciates the security that comes with the mathematical work that goes into Bitcoin's blockchain. Counterfeiting is a major problem with conventional money because each Bitcoin has a unique identifier and any coins numbered outside of a certain range are fake, the whole system is mathematically controlled. Still not a currency. While there is no formal or legal definition of what a currency actually is, Epstein does not think Bitcoin can be classified as one anyway. Traditional currency is money that has a sovereign guarantee behind it, a governmental promise that the value is secure. But because Bitcoin is backed by technology, it misses that mark. However, he adds that it works as a store of value. Quote, when we talk about gold as a store of value, that just means a lot of people agree to pay the same price for 1 ounce of gold. In 2017, enough people agree on the value of Bitcoin that it can serve the same purpose. There will only ever be 21 million Bitcoins, but this limit comes from computer code, not by how many Bitcoins are left to remove from the earth. If we learn tomorrow that half of Montana contained a secret cache of gold, the value of gold would decrease instantly. Bitcoin doesn't have this problem. Call for an update? Finally, the billionaire sees Bitcoin as a powerful catalyst that can start to change the landscape of business and finance. Terms such as currency, money, wealth, value, and even cost need to be updated and revisited. He believes that it is Bitcoin that can make people rethink these ideas. And I would have to agree with him on that. The cost of moving Bitcoin is much less than any other currency. However, we have like among the highest transaction fees on the fucking planet. And I'm kind of ashamed to say that, actually. But, you know, it's only because Bitcoin isn't actually worth about $10,000 a coin, which it should be. But that's just my feeling. I think that if it were $10,000 a Bitcoin, that people would be far less focused on trying to make their money back on fees, and so the fee market would change radically and go down. But, you know, it seems to me like they're trying to keep the cost of transactions high as to motivate people to migrate over to segregated witness lightning networks with the promise of cheaper transaction fees. However, I don't think that's going to be the case. You know, I mean, I did the math. If you were to be running a payment channel and keeping it open for 1,000 blocks and processing transactions on it, even at 1 penny, it was like some outrageous sum of money. Now, again, I've had people tell me that this isn't how the whole Lightning Network thing is going to work, and that, you know, but they don't actually, like, I don't know. There's gaps in their story, you know. Anyway, let's go ahead and throw back down into some music. I think this thing is really important, though, with Epstein weighing in on Bitcoin. It doesn't say whether or not he actually bought any, though. And I think that's the acid test. when we hear that the man bought like 12 Bitcoin or some shit like that, okay, now I can take him seriously because he's willing to put his money where his mouth is. But like I said, they didn't actually say that on here. I don't know. You would think if he's a billionaire, he could afford to throw down a few $100,000 on Bitcoin at least, right? Anyway, like I said, let's go ahead and throw down into some music. And as usual, I hadn't really picked anything, but I know, Within the Ruins. And I haven't played this one before, so let's go ahead and give it a wing. Feeding Frenzy, here on Coin Metal. And that was Prong with Do Nothing off of No Absolutes. Or X, No Absolutes. Gotta put that X in there, otherwise it won't show up in the Google. Oi! Had to get just a casual little smoke break in there. And this has been kind of predicted as far as regulators go and their attempts to get a grasp on regulating cryptocurrencies and the markets of them. And so yeah, our next little article here is on Bloomberg.com. Global regulators play whack-a-mole as demand explodes. I wonder why. And this is by Olga Karif and Camilla Russo. It was written October 11th, 2017, 5 a.m. EDT. And I suppose, yeah, it is October 11th, isn't it? Anyway, continuing on. Regulators worldwide are finding that it's incredibly hard to control the explosive growth of money tied to no nation. Russian President Vladimir Putin is the latest to call for regulation of cryptocurrencies, saying there are, quote, serious risks they can be used for money laundering or tax evasion. Finance Minister Anton Soluonov has called for regulating digital money as securities, while central bank officials vowed to work with prosecutors to block websites that allow retail investors to access Bitcoin exchanges. Quote, "We think this is a pyramid scheme," said Sergei Shvetsov, first deputy governor of the central bank. Global efforts to regulate digital money have accelerated in the past month since China banned initial coin offerings and ordered all cryptocurrency exchanges to close, following inspections of more than 1,000 trading venues over a 6-month period. At least 13 other countries have imposed new rules or announced plans to tighten regulations, including South Korea, which also banned ICOs last week. Banned ICOs. Last week, European Central Bank Governing Council member Ewald Nowotny said the bank is discussing, quote, concrete legal restrictions on digital coin sales. It's a development that creators of Bitcoin, the best-known digital currency, saw coming and prepared for. Since it works on a peer-to-peer network, users can buy and sell coins and secure and perpetuate the system without any government or central bank involvement. Trying to control it is, quote, like trying to catch water, said Alex Tapscott, chief executive of NextBlock Global Ltd., a venture capital firm that invests in blockchain startups, most likely run by Goldman Sachs. 9 years after a mysterious coder that goes by the name Satoshi Nakamoto unleashed Bitcoin on the world, some see it as a revolutionary use of technology that takes power away from governments and gives it to individuals, like handheld video cameras in the hands of civil rights activists, or social media during the Arab Spring uprisings. Quote, as cryptocurrencies gain wider acceptance, their ability to undermine politicians increases, said Roger Ver, an early investor in Bitcoin who is known as Bitcoin Jesus for proselytizing about the digital currency in its early days. Quote, the invention of Bitcoin is one of the most liberating technologies in all of humanity. It is on par with the importance of the invention of the printing press or the internet itself. Digital currencies live on computers and can be held by millions worldwide, bought and sold on websites at meetups or in person-to-person meetings. Even if there is no ATM or exchange nearby, anyone with access to the internet can buy them, and they can be used to purchase everything from a sandwich to a carpet to a house, or they can be held as an investment. An investment of $1,000 in Bitcoin in 2012 would now be worth $4.9 million, while the number of transactions continues to increase. In the second quarter, they reached an average of about 291,000 per day for Bitcoin, and nearly double that when other major cryptocurrencies are included. From about 60,000 per day in 2013, according to researcher CoinDesk. Dark side. Yet there is an undeniable dark side. Bitcoin rose to prominence with Silk Road, a marketplace for weapons, drugs, and other illicit goods. And it's still used for such sales on the so-called dark web, even after Silk Road was shut down. It's also the currency of choice for hackers who have invaded the computers of everyone from hospitals to police departments. Even the North Korean government is accumulating Bitcoin as a means to dodge international sanctions. Good on you! That's why Jamie Dimon, the chief executive officer of JPMorgan Chase & Co., sees Bitcoin as a, quote, fraud that's destined to come crashing down as its use in ransomware schemes, drug and arms trafficking ultimately persuades authorities to find a way to put a stop to it. Quote, someone's going to get killed and then the government's going to come down, Dimon said. You just saw in China, governments like to control their money supply. Yeah, they do. That's their money supply. Fuck them. While any central banker might be troubled by a stateless currency competing with the coin of the realm, China's efforts to crack down suggest it may be harder than it appears. While the government crackdown sent Bitcoin prices plunging as much as 30%, it has now recovered those losses, even as a growing number of governments take action. Once the largest global market for trading, China now accounts for 1.5% of Bitcoin transactions, while Japan, where regulators have been more open to digital currencies, accounts for more than 60%, according to CryptoCompare.com. Bitcoin mining. China is the leader in Bitcoin mining capacity, computers that are used to support Bitcoin transactions and then get paid for the service with newly minted coins. Regulators have so far refrained from any action in that area. Jihan Wu, I've never been clear on that. CEO of Bitmain Technologies Ltd., the world's biggest mining operation, said in an interview that regional governments are welcome to legally set up Bitcoin mining farms which are clean and considered part of the high-tech industry. Cryptocurrencies are attractive where there are restrictions on taking cash abroad or where the local currency is weakening because of inflation, like in the US. In Venezuela, a place with both problems, Bitcoin's weekly trading volume spiked to an all-time high in early April when violent clashes between protesters and police started. The government has conducted raids on Bitcoin miners, accusing them of internet fraud and electricity theft. And just a side note on that, then the cops take the mining gear home to their house and set it up and start mining at home. How's that for fuck you? Anyway, continuing on. The same combination of capital controls, high inflation, and weakening currency have driven demand for cryptocurrencies across Latin America. Bitcoin demand spiked in Argentina in 2013 after former President Cristina Fernández de Kirchner banned dollar purchases. While Ecuador and Bolivia are among the few countries that have outright bans on the currency, doesn't really stop shit. By contrast, the UK has exempted Bitcoin from value-added taxes and says it should be considered a foreign currency for corporate tax purposes. The UK was early in publishing clear directives, ruling in 2014 that, quote, Bitcoin may be held as an investment or used to pay for goods or services at merchants where it is accepted. Crypto-friendly Japan. Japan this year began enforcing a law that recognizes Bitcoin as a legal method of payment and overseeing cryptocurrency exchanges, effectively providing clarity and support to local entrepreneurs. That's something Vietnam may do as well. The U.S. Commodities Futures Trading Commission classified Bitcoin as a commodity in September of 2015, and this year approved the first cryptocurrency options trading, clearing, and settlement firm. The Securities and Exchange Commission in July said some coins issued in ICOs would be considered securities and regulated as such unless, quote, a valid exemption applies. While government efforts to come to grips with digital money have been fraught, the more important trend may be the growing number of money managers who are looking at cryptocurrencies as an asset class for investment. Quote, what's more interesting is the increased sophistication of the institutional buy side for cryptocurrencies, said Nolan Burrell. Wow. Can't pronounce that. There's too many vowels in there. Bowell, Director of Research at CoinDesk. Quote, this new type of buyer means that this is only a hiccup. There are important sums of fiat ready to cross into crypto in the short term. There are more than 68 hedge funds focused on cryptocurrencies today, many of them run by people from Wall Street. And that is that. And so there you have it. And there has been additional interest in other aspects of cryptocurrencies, and I think it's something to pay attention to. Fidelity, as I reported, I believe it was Monday. It might have been Monday. It might have been on Friday's show. I have a few to update and get online. Man, you just have no idea how much shit I'm involved in right now. I'm just like, I'm so freaking busy. But in any case, Fidelity has been getting into mining both Bitcoin and Ethereum. And they're not doing so in a really serious means, but they are making money on it. And that's the key right there, is that if they start getting a good enough taste, if they happen to be holding Bitcoin while it shoots from, straight from where it is now to $6,200, $6,300, that they're going to be really fucking happy that they had it at that moment and say, maybe maybe we ought to be throwing a little bit more money at this whole mining venture that we're in, because we're starting to make a shit ton of money at this. I mean, this is an inevitability, people. This discussion that I'm having with myself in lieu of Fidelity, it's going to happen. It's going to be whispered at some fucking board meeting or stated clearly that, hey, you know what? Last quarter, we made a shit ton of money on Bitcoin mining. So, how's about throwing us a few more bones so we can expand this unit here? Because, like I said, last quarter we did really well, and we project if we do a hardware upgrade right now and maybe expand into one of the additional excess warehouses that we got somewhere, that we could be really hitting some highs this next quarter on Bitcoin mining. So let's get with that. I mean, it's going to fucking happen. And as a matter of fact, I've got another article here mentioning that that aspect. Let's see, where is it? Oh, I thought this was really humorous, but it gives us a different clue, and we got to pay attention to this shit, man. This is on Fortune.com. A Bitcoin crash could really punish these stocks. Chip makers Nvidia and Advanced Micro Devices would be likely to see their stock prices suffer if the Bitcoin market were to collapse, brokerage TD Ameritrade has said. The question of whether Bitcoin is in a bubble or not is one that continues to rage across the tech and financial worlds, particularly after a tumultuous year in which the cryptocurrency more than quadrupled in value, with some bumps along the way. Bitcoin started to crash last month largely due to negative regulatory outlook in China, but mostly recovered and currently trades at $4,600 to one Bitcoin. However, the virtual currency mostly still being used by speculators rather than regular users, a crash still could come. On Sunday, the Wall Street Journal looked into where the risks lie, and Joe Kinahan, TD Ameritrade's chief market strategist, predicted, quote, collateral damage to more than just Bitcoin investors themselves. Nvidia, NVDA, and AMD are exposed because they make graphics processors which are heavily used in the Bitcoin, quote, mining industry. As Bitcoin has taken off, the industry has come to represent a significant slice of the graphics processor sales, 6.7% of Nvidia's Q2 revenues, for example. Quote, anybody getting more than 5% of their business from crypto, it's starting to become significant, and you could see their stock prices very quickly collapse, Kinahan said. He also pointed out that Bitcoin's heavy speculation-led fluctuations in value make it more difficult to use for regular transactions, thereby making it even more of a speculator's game. The article also suggested that financial technology firms could suffer if Bitcoin were to crash. However, while many fintech startups and larger banks are investing a lot in blockchain technology which underpins Bitcoin, the technology in no way depends on Bitcoin, so the fallout would likely be limited. What would really make Bitcoin dangerous to the wider market? Bitcoin exchange traded funds, ETFs, for which the WSJ's interviewees saw great demand. Quote, you're going to put a derivative on a derivative of an unregulated asset? That to me is a recipe for disaster. Themis Trading's Joe Saluzzi said in the piece. Yeah, I agree with him. Oddly enough, I do. But I Anyway, that's the end of that article. But it gives us some clues here. Okay? That these companies, NVIDIA and AMD, are starting to take their Bitcoin earnings a bit more seriously. And I predicted this would happen. And now, what we really need to happen is for you guys to start getting fucking heavier into mining. You know, I mean, I think that's the participation part that is lacking in Bitcoin. And as a matter of fact, I think this is actually affecting Bitcoin in an interesting way. And this is just like speculation and suspicion on my end. But I think what's going on right now on Bitcoin's network is that like you can simulate nodes, but you can't necessarily simulate miners. And if you can simulate miners, you're actually dedicating hashing power on those simulated miners on the network, right? Well, with the nodes, though, you could simulate them and just use them to propagate transactions, right? You don't actually require as much hashing power. But you will require some processing power, just not as much, right? So it's cheaper to do. Now, check this out. What if you wanted to make Bitcoin into SegWitCoin, right? And you couldn't get the miners to do it for you, right? Or enough of them to get the change to happen. How would you do it? Well, if I can virtually simulate nodes, I would simulate a whole bunch of nodes that would only propagate SegWitCoin transactions on the Bitcoin network. They wouldn't propagate Bitcoin transactions, only SegWitCoin transactions. So if you transact Bitcoin as SegWitCoin, it gets communicated really quickly across their nodes, right? But if you try to broadcast a regular Bitcoin transaction as Bitcoin instead of SegWitCoin, they don't see it, or they consider it spam and they just bounce it, right? Well, see, I think this is actually the way that they've gotten SegWit on every single other coin. See, they can't get the miners to implement it because the miners can see it's like, this isn't really a good thing to do. And so what they do is they change the nodes over to where they will do the SegWit transactions, right? And so then they get, a certain percentage of the miners to do SegWit transactions, maybe a few of their own, and they only count their own transactions. But they're the majority of the nodes. So by bouncing the non-SegWit coin transactions, they make it look like the consensus of transactions that are coming across are in SegWitCoin's protocols, not Bitcoin's. And so they end up running the longest chain as they discourage more and more miners off of the network. Well, see, I think that's what's going on with Bitcoin right now, is they're not propagating Bitcoin transactions, they're only propagating SegWitCoin transactions. So if you process your Bitcoin transaction as a SegWitCoin transaction, and your SegWitCoin capable wallet is probably doing that in the background, you see what I'm saying? You might not even see it. I mean, unless you actually bothered to look. But I think that's the way that they've done it on every other coin. Because, I saw this pie chart, right? And it said that 97% of the nodes out there were actually SegWitCoin nodes. And I tried to do a Bitcoin transaction a couple weeks ago. And it took forever. It took like 2 hours to get one confirmation. And according to everything I'd been reading, the fucking mempool was clear. So it's like there's no reason why this transaction should have been held up for as long as it was. Unless, because I was doing it from a non-SegWit wallet address and I was broadcasting it as Bitcoin, not SegWit coin, it wasn't being picked up by 97% of the nodes out there. So it wasn't being propagated through the network very quickly. And so that's why it was taking 2 forevers to get a single fucking confirmation that should only take 10 minutes. And I think it's fucking dirty, underhanded fucking bullshit if that's exactly what's going on. And honestly, I think that is. In the longer term, I think that I think that what would be really great is if everybody just like kept doing what they were doing. You know, so if you weren't doing SegWit coin transaction mining, then just keep doing that. You know, you're supposed to be including people into the consensus, not just simply discluding them and calling them fucking assholes for not joining on to you. That's not achieving consensus. That's being a fucking asshole. You see how that works? There's a difference there. Anyway, back onto articles. I have a couple here that could take the direction of the show a certain way. And I do want to review this one because it's actually pretty funny from certain perspectives. I got to do something here. I temporarily allow Forbes. You fucking assholes. You know, the internet is getting to such a point, man, where if you got like no script, it'll like certain pages will just like not load for you. They're just like, oh, fuck you. You know, you don't want to allow us to track your bullshit, then we're just not going to let you see our shit. Fuck Forbes. If they're going to be like that, they can just go fuck themselves. Oh, wait, maybe? Here. There we go. So here we go. This one's on Forbes. It's, here's why Bitcoin won't replace gold so easily, like we ever anticipated that it would, right? And this is by Frank Holmes. Let's see, it was written October 9th, 2017 at approximately 2:37 p.m. No indication of what time zone that was. Anyway, continuing on. Last week I spoke on the topic of the blockchain. Frank, did he even bother to read this fucking article? He should have read it aloud because he would have caught this. Anyway, continuing. Last week I spoke on the topic of the blockchain last week at the Subscriber Investment Summit in Vancouver. My presentation focused on the future of mining, not just of gold and precious metals, but also cryptocurrencies. Believe it or not, there are upwards of 2,100 digital currencies being traded in the world right now, with a combined market cap of nearly $150 billion, according to CoinRanking.com. Obviously, not all of these cryptos will survive. We're still in the early innings. Last month, I compared this exciting new digital world to the earliest days of the dot-com era, and just as there were winners and losers then, so too will there be winners and losers today. Although Bitcoin and Ethereum appear to be the front runners right now, recall that only 20 years ago, AOL and Yahoo were poised to dominate the internet. How times have changed. It will be interesting to see which coins emerge as the, quote, Amazon and Google of cryptocurrencies. For now, Ethereum has some huge backers. The Enterprise Ethereum Alliance, according to its website, seeks to, quote, learn from and build upon the only smart contract supporting blockchain currently running in real-world production, Ethereum. The EEA includes several big-name financial and tech firms such as Credit Suisse, Intel, Microsoft, and JPMorgan Chase, whose own CEO, Jamie Dimon, knocked cryptos a couple weeks ago. Will Bitcoin replace gold? Lately, I've been seeing more and more headlines asking whether cryptos are, quote, killing gold. Would the gold price be higher today if massive amounts of money weren't flowing into Bitcoin? Both assets, after all, are sometimes favored as safe havens. They're decentralized and accepted all over the world, 24 hours a day. Transactions are anonymous. Supply is limited. But I don't think for a second that cryptocurrencies will ever replace gold for a number of reasons. For one, cryptos are strictly forms of currency, whereas gold has many other time-tested applications, from jewelry to dentistry to electronics. Unlike cryptos, gold doesn't require electricity to trade. This makes it especially useful in situations such as hurricane-ravaged Puerto Rico, where 95% of the people are reportedly still without power. Right now, the island's economy is cash only. If you have gold jewelry or coins, they can be converted into cash, all without electricity or Wi-Fi. Finally, gold remains one of the most liquid assets, trading daily in well-established exchanges all around the globe. Every day, some $13.8 billion or $18 billion worth of physical gold are traded in London alone, according to the London Bullion Market Association, the LBMA. The cryptocurrency market, although expanding rapidly, is not quite there yet. I will admit, though, that Bitcoin is energizing some investors, especially millennials, in ways that gold might have a hard time doing. The proof is all over the internet. You can find a number of TED Talks on Bitcoin, cryptocurrencies, and the blockchain, but to my knowledge, none is available on gold investing. YouTube is likely bursting at the seams with videos on cryptos. Most certainly. Bitcoin is up 350% for the year. Ethereum is an unbelievable 3,600%. Gold, meanwhile, is up around 10%. Producers, as measured by the NYSE Arca Gold Miners Index, have gained 11.5% in 2017, 23% since its 52-week low in December of 2016. Looking past the negative to find the good news. The news is filled with negative headlines, and sometimes it's challenging to stay positive. Take Friday's jobs report. It showed that the U.S. lost 33,000 jobs in September, the first month in 7 years that this happened. A weak report was expected because of Hurricane Irma, but no one could have guessed that losses would be this deep. The jobs report wasn't all bad news, however. For one, the decline is likely temporary. Beyond that, a record 4.88 million Americans who were previously sitting out of the labor force found work last month. This helped the unemployment rate to fall to 4.2%, a 16-year low. It only works out that way if you don't count the people that aren't bothering to work. There's more that supports a stronger U.S. economy. As I shared with you last week, the Manufacturing ISM Purchasing Managers Index, PMI, rose to a 13-year high in September, indicating rapid expansion in the manufacturing industry. Factory orders were up during the month. Auto sales were up. Oil has stayed in the relatively low $50 a barrel range, which is good for transportation and industrials, especially airlines. Small cap stocks, as measured by the Russell 2000 Index, continue to climb above their 50-day and 200-day moving averages as excitement over tax reform intensifies. These are among the reasons why I remain bullish. One final note. Speaking on tax reform, Warren Buffett told CNBC last week that he's waiting to sell assets until he knows the plan will go through. Quote, I would feel kind of silly if I realized $1 billion worth of gains and paid $350 million in tax on it if I just waited a few months and would have paid $250 million, he said. It's a fair comment, and I imagine other like-minded, forward-thinking investors, buyers, and sellers will also want to make huge transactions if they will want to wait to make huge transactions if they can help it. Tax reform isn't a done deal, but I think it has a much better chance of being signed into law than a healthcare overhaul. Me too. All opinions expressed and data provided are subject to change without notice. Some of these opinions may not be appropriate to every investor. By clicking the links above, you will be directed to a third party's website and blah blah blah. Fuck you, fuck you, fuck you, ISM, blah blah blah, SEC, blah blah blah. Yeah, okay. So there you have it. I don't think we're ever going to see a real big Bitcoin crash, and no, I don't think it will ever replace gold. I mean, gold has the utility of being physical, and I don't see a time where we'll be able to reliably connect gold to a cryptocurrency, at least not while we have fiat currencies as an intermediary. And I would like to say one thing. With regard to fiat currencies, my understanding is what makes them, or one of the factors that makes them fiat currencies, is their issuance. It's not actually according to a set distribution model. It fluctuates, it changes. And there's this, I think it's a mistake to consider cryptocurrencies that are at least based on proof of work to be fiat currencies. I could be mistaken on this, but a lot of people say that they don't have an intrinsic value. Well, in my opinion, they are intrinsic value. And let me explain what I mean by that. That they're the result of work already performed. And this is assuming, of course, that they weren't just pre-mined. But, if you can verify that they were mined, within a certain duration of time, and you can do that, then they are proof that work has already been performed. That means electricity has been expended. That means internet bandwidth has been dedicated to transmitting the information back and forth. It means that liquid capital has been expended on hardware. These things are all necessary in order for mining to happen, and the coin itself is proof that the mining happened. So you see how there's a difference there? We're not just placing faith that in God we trust that the bank will eventually pay off on this IOU. No. We're putting trust in the fact that somebody already dedicated electricity and bandwidth and hardware to mining it. And we can prove to some extent that actually occurred on the network. So, that's just like a little segue off of that, because like I said, people like to categorize Bitcoin along with other fiat currencies, and like I said, I think that's a mischaracterization. I would say they're a different type of asset class. with regard to, whether or not they're a fiat currency, or because they're not a physical currency, or at least they can be a physical currency, but it's not specifically a trait of cryptocurrencies. Anyway, let's go ahead and throw down into some music. And as far as what to play, it's always a challenge because I got so much good stuff in here. And fuck it, Shedding Skin by Pantera here on Coin Metal. And that was Anthrax with Evil Twin. And I was just reflecting back on that the article that I had open about some of the other stocks that might get impacted if Bitcoin were to suffer a serious crash. And honestly, I don't really think that analysis is all that valid. For one thing, most people that mine are not mining with GPUs. I mean, at least on Bitcoin. Most of the Bitcoin mining is being done by ASIC chips, and unless AMD and Nvidia have started producing ASIC chips, something I only fantasize about, I don't see that really impacting them all that much. What would impact them more would be a cryptocurrency that's really dependent on GPU mining, like maybe I don't know, like Zcash or maybe Monero or something like that. If one of those were to suffer a major price correction, that might have a temporary impact on AMD or anybody else making mining chipsets, but very, very temporary. I mean, when you're looking at even a quarterly term, you're going to be seeing that they're making money still. I just don't see it, honestly. Anyway, continuing on, and I just want to segue just for a moment on that, because I've been noticing that more and more we're seeing that governments and companies are starting to embrace cryptocurrencies from the ground up. Talking about having their own cryptocurrencies. Okay, getting involved in mining. Not giving a shit about people mining, with regard to China. These all indicate to me that Bitcoin and the mining and the trading and all of that and regulation, it's a game of mutually assured destruction, but there's the whack-a-mole aspect of it. You don't have to worry about radioactive fallout if you have to come back to a certain district. Or if you just adapt the way that you trade within that district. And on that point, the article we read earlier that quoted China's Bitcoin transactions being down to like 1.5% or some shit like, I'll tell you right now, they're probably not able to count all of the ways that Chinese traders are transacting Bitcoin. For all they know, there are Chinese traders who are spoofing themselves as Japanese traders, and that increases the apparent Bitcoin traffic going through Japan, whereas, like I said, it's actually happening in China or in somewhere else where they're restrictive, like Bolivia. Anyway, as I started off saying before, that little segue there, we ended off with an article that commented on Jamie Dimon's bullshit, and this article is on CNBC.com, amazingly enough. Tech VC to Jamie Dimon. Bitcoin is not a fraud. Do some homework. Fuck, that's rule number 2 on this show. Catherine Clifford was the author, so clearly, no penis. JPMorgan CEO Jamie Dimon has been publicly dismissive of Bitcoin, calling it a, quote, fraud that will not survive. It's just not a real thing. Eventually, it will be closed, Dimon said at the Delivering Alpha conference in September, presented by CNBC and Institutional Investor. Quote, it won't end well. Someone's going to get killed. Whatever, dude. But Bart Stevens, co-founder and managing partner of San Francisco-based venture capital firm Blockchain Capital, recently slammed Dimon's remarks as hypocritical and ignorant. While Dimon was making those comments, I was an invited speaker at JP Morgan's offices in San Francisco to give a talk with other fund managers and clients of JP Morgan who are really curious about cryptocurrencies and the underlying blockchain technology, said Stevens, speaking with Fortune's term sheet newsletter. So there's a lot of hypocrisy going on with Jamie Dimon, he says. JP Morgan declined to comment. While Jamie Dimon of JP Morgan was bashing Bitcoin, his SF office was hosting blah blah blah, and it's just, I guess, like a tweet or something. Also, Stevens says that Dimon's comments discounting the significance of Bitcoin were reflective of his lack of understanding of the technology's potential. Quote, the blockchain and cryptocurrencies have elicited an emotional response from financial incumbents. The technology is controversial and misunderstood, but that doesn't make it any less real, he says, to Term Sheet. I would encourage Jamie Dimon and others to do some homework first. It's not a fraud. It's not a Ponzi scheme. It's a robust technology that's going to impact multiple industries. Stevens says, don't discount it. Stevens says the wave is coming. Quote, for too long, Silicon Valley has ignored the tsunami, he says. Many of my friends who were at generalist VC firms dismiss this stuff out of hand because they're not spending the time to do the homework. Of course, it is in Stevens' interest to publicly promote the potential of Bitcoin technology. He is an investor in it. Blockchain Capital has a whole portfolio of blockchain-enabled companies, including Coinbase, Ripple, and Abra. However, Stevens is not alone in publicly taking issue with Dimon's dismissiveness about the technology. One cryptocurrency startup used Dimon's comments as fodder for a full-page ad in the Wall Street Journal. Quote, maybe Jamie will fire you, but you'll be free to trade in the crypto world, the ad says. Dimon said he would, quote, fire in a second any JP Morgan trader who was trading Bitcoin. Quote, it's against our rules, and they are stupid. Yes, your rules are stupid. Not all legacy bank leaders write off Bitcoin, notes Stevens. For every negative Jamie Dimon, I could point you to two Wall Street CEOs like Lloyd Blankfein at Goldman Sachs and Abigail Johnson at Fidelity, who are making constructive comments on both cryptocurrency and the blockchain. And Stevens says it is his responsibility as an investor in new technology to stay level-headed through the volatility. Quote, every new technology that is confusing, fast-moving, and disruptive is going to be controversial. You'll see people have emotional reactions. That's part of why blockchain capital exists. We know this industry requires specialization. No, it doesn't. Stevens says. And yeah. So, again, Jamie Dimon and his comments, I don't think they really impacted the market. I think they were just carefully timed. Because it was like maybe a day, maybe two, maybe even only like 12 to 14 hours before the CBOC decided to make CBOC decided to make their statements concerning ICO and exchanges. And so, people make a big kerfuffle about him, like, he's so fucking all-knowing and whatnot that he can make a statement and it moves the market. I don't think Jamie Dimon is all that, influential in cryptocurrencies. I think like a lot of legacy firms, we kind of ignore them because they're playing with skeletons, They're playing with bones of dead, obsolete shit. Anyway, continuing on. Got another article here. And this one's on futurism.com. And let's see if it actually is a full article and not just a reference to another article somewhere else. Okay. I wasn't sure. It's got some information from other sources, but not necessarily on another website. Anyway, this was written by Brad Jones. Clearly from the picture, yes, penis. Harvard professor, quote, "In the long run, the price of Bitcoin will collapse." Futures market. This summer, the total value of the Bitcoin market reached $160 billion, almost 10 times what it was at the beginning of 2017. Now, a leading economic expert is warning investors that while cryptocurrencies may very well be the financial wave of the future, the value of Bitcoin will eventually collapse. Kenneth Rogoff is a professor of economics at Harvard University, and from 2001 to 2003, he served as the chief economist of the International Monetary Fund. Wow. In an opinion piece published by The Guardian, which we may actually be reading next. This week he praises the technology underpinning Bitcoin, but says he believes too many factors are working against the currency for its value to continue to increase indefinitely. In the article, he argues that Bitcoin evangelists who expect the currency to become ubiquitous are just setting themselves up for disappointment. Quote, "It is folly to think that Bitcoin will ever be allowed to supplant central bank issued monies," wrote Rogoff. "It's one thing for governments to allow small anonymous transactions with virtual currencies. Indeed, this would be desirable. But it is an entirely different matter for governments to allow large-scale anonymous payments, which would make it extremely difficult to collect taxes or counter criminal activity." Bad for Bitcoin. Bitcoin was once the only cryptocurrency with any real cachet, and it's still the most popular. However, a variety of competing altcoins and tokens have emerged in recent years, with the likes of Ether and Ripple quickly establishing themselves within the crypto market. External competition isn't the only reason Rogoff believes Bitcoin will collapse, though. According to The Economist, governments could end up crippling the currency's value if the current free-for-all crypto landscape changes too much or too quickly. He holds the opinion that regulation is unavoidable, as governments are going to want to keep an eye on transactions to cut down on tax evasion and other crimes. We're going to talk about that in a moment here. Rogoff points to Japan as an example. Bitcoin is already very popular in the Asian nation, and it appears is set to grow to even more thanks to relaxed regulation. However, if the country decides to draft and enforce new legislation or if its banks are successful in their attempts to create an alternative cryptocurrency, Bitcoin's value could suffer. Rogoff doesn't say when Bitcoin will collapse, though, so actually taking action based on his prediction is futile. Meanwhile, other experts have shared far more concrete predictions for Bitcoin's future, and many of those are far more optimistic. Ronnie Moaz of Standpoint Research believes Bitcoin's value could reach $20,000 in the next 3 years, while veteran trader Master Luke has predicted that Bitcoin will be worth $15,000 before the end of 2017. What, dude? That's... no. As for regulations having an impact on the crypto's future value, economists at the Central Bank of Finland believe blockchain technology is self-regulating, and that governments likely couldn't regulate it even if they wanted to. That's closer to the truth. And allow it... leave it to the Finns to figure it out. You know? They actually bothered to do a dispassionate review of cryptocurrencies and found them to be successful in many of the metrics that we consider currencies by, and see that they don't actually need any additional regulation. And this is a point that I wanted to make on here, is that they allude to banks making their own alternative cryptocurrencies. And here's the problem with this idea, is because all of them are going to be using editable blockchains, meaning they will be able to go back and edit the global record, or their record at least, of their blockchain. And that, and I don't foresee a future where Goldman Sachs is actually going to create, or the CBOC even for that matter, creating a cryptocurrency that they're going to allow the public to mine. And I think we've pointed out enough on this show that participation is absolutely key for a cryptocurrency to work. And not just in spending it. There have to be miners, and not just your one network of miners that you run all of. We can't expect them to all tell the truth. I mean, we know that you could broadcast an alternative blockchain on your own network and no one would be the wiser. You know, you could be running multiple blockchains at any one time, and if you don't like the outcome of a transaction, you know, a deposit came in before withdrawal, and you know, you weren't able to hammer somebody with an overdraft fee because you couldn't reorder the transaction. Well, fuck, you just edit the order in your alternative blockchain, rebroadcast that one as the dominant, and there you go. You fixed the issue. And this is why all of these closed blockchain technologies are completely fucking worthless to the greater public. And why they will never be able to compete with cryptocurrencies as far as the trust factor is concerned. Because, I'm sorry, I don't trust Goldman Sachs. And I know there's a lot of institutional investors that do. Because, you know, they've got all kinds of relationships that allow them to get all kinds of little cuts and little nicks here and there. And they're able to make that into a substantial profit at the end of the quarter or the end of the year or whatever. But I don't see that lasting forever. At some point or another, the SEC is going to modify their regulations, and a lot of the shadow money that the institutional firms like Goldman Sachs and JPMorgan depend on suddenly won't be available to them. Because the SEC will say shit like, well, blockchains are possible now, and we can log all of your information on a blockchain, so we want to cut the reporting window down from a month to continuous. We want you to continuously report on our blockchain. Deal with that shit. I mean, come on now. You know, we're talking about the most transparent tool of registry of anything ever created by man. Unalterable in the right circumstances. But what about when all of the little shadow money is demanded to be documented on such a ledger by, say, the IRS? I bet you anything there's going to be all kinds of lobbying on from that point on by Goldman Sachs and others to try and get some extra favor. You know, maybe bribe somebody at the SEC to edit their blockchain to their favor or something. I don't know. But I can see that no matter what tool it is that's being used to document things, if people want to allow for the potential of abuse and bribery and whatnot, they will factor it in there, and it will continue to happen. Not even blockchains. And like I said, editable blockchains are a reality. They're not a fiction. There have been patents written for the fucking things. So that gives you an idea of where these people are thinking on stuff. Anyway, one last music break. I want to go ahead and put in something off of 0 Days here. Divide and Conquer. Here on Coin Metal. And that was Static X with Permanence. And so I do have one more article. I might have enough time to actually belt it out. And so we're going to do it. And this one is, it's on The Guardian of all places. Bitcoin's price bubble will burst under government pressure. And this is by Kenneth Rogoff. Is the cryptocurrency Bitcoin the biggest bubble in the world today, or a great investment bet on the cutting edge of new age financial technology? My best guess is that in the long run, the technology will thrive, but the price of Bitcoin will collapse. If you haven't been following the Bitcoin story, its price is up 600% over the past 12 months and 1,600% in the past 24 months. At over $4,200 as of October 5th, and it's up to $4,800 now, a single unit of the virtual currency is now worth more than 3 times an ounce of gold. Some Bitcoin evangelists see it going far higher in the next few years. What happens from here will depend a lot on how governments react. Will they tolerate anonymous payment systems that facilitate tax evasion and crime? Will they create digital currencies of their own? Another key question is how successfully Bitcoin's numerous altcoin competitors can penetrate the market. In principle, it's supremely easy to clone or improve on Bitcoin's technology. What is not so easy is to duplicate Bitcoin's established lead in credibility and the large ecosystem of applications that have built up around it. For now, the regulatory environment remains a free-for-all. China's government, concerned with the use of Bitcoin in capital flight and tax evasion, has recently banned Bitcoin exchanges. Japan, on the other hand, has enshrined Bitcoin as legal tender in an apparent bid to become the global center of fintech. And it might actually work. The United States is taking tentative steps to follow Japan in regulating fintech, though the endgame is far from clear. Importantly, Bitcoin does not need to win every battle to justify a sky-high price. Japan, the world's third largest economy, has an extraordinarily high currency-to-income ratio, roughly 20%. So Bitcoin's success there is a major triumph. In Silicon Valley, drooling executives are both investing in Bitcoin and pouring money into competitors. After Bitcoin, the most important is Ethereum. The sweeping Amazon-like ambition of Ethereum is to allow its users to employ the same general technology to negotiate and write, quote, smart contracts for just about anything. As of early October, Ethereum's market capitalization stood at $28 billion versus $72 billion for Bitcoin. Ripple, a platform championed by the banking sector to slash transaction costs for interbank and overseas transfers, is a distant third at $9 billion. Behind the top three are dozens of fledgling competitors. Most experts agree that the ingenious technology behind virtual currencies may have broad applications for cybersecurity, which currently poses one of the biggest challenges to the stability of the global financial system. For many developers, the goal of achieving a cheaper, more secure payments mechanism has supplanted Bitcoin's ambition of replacing dollars. But it is folly to think that Bitcoin will ever be allowed to supplant central bank issued money. It is one thing for governments to allow small anonymous transactions with virtual currencies. Indeed, this would be desirable. But it is an entirely different matter for governments to allow large-scale anonymous payments, which would make it extremely difficult to collect taxes or counter criminal activity. Of course, as I noted in my recent book on past, present, and future currencies, governments that issue large denomination bills also risk aiding tax evasion and crime. But cash at least has bulk, unlike virtual currency. It will be interesting to see how the Japanese experiment evolves. The government has indicated that it will force Bitcoin exchanges to be on the lookout for criminal activity and to collect information on deposit holders. Still, one can be sure that global tax evaders will seek ways to acquire Bitcoin anonymously abroad and then launder their money through Japanese accounts. Carrying paper currency in and out of a country is a major cost for tax evaders and criminals. By embracing virtual currencies, Japan risks becoming a Switzerland-like tax haven, with the bank secrecy laws baked into the technology. Were Bitcoin stripped of its near anonymity, it would be hard to justify its current price. Perhaps Bitcoin speculators are betting that there will always be a consortium of rogue states allowing anonymous Bitcoin usage, or even state actors such as North Korea that will exploit it. Good! Will the price of Bitcoin drop to zero if governments could perfectly observe transactions? Perhaps not. Even though Bitcoin transactions require an exorbitant amount of electricity, with some improvements, Bitcoin might still beat the 2% fees the banks charge on credit and debit cards. Finally, it is hard to see what would stop central banks from creating their own digital currencies and using regulation to tilt the playing field until they win. The long history of currency tells us that what the private sector innovates, the state eventually regulates and appropriates. I have no idea where Bitcoin's price will go over the next couple of years, but there is no reason to expect virtual currency to avoid a similar fate. This is true, sir, and I will not deny it. However, there were many more limitations to various technologies at the entry points and some that were introduced later. And I won't go into that, but in the long term, I see Bitcoin and cryptocurrencies outlasting what we call state and national governments. I don't believe that they will be able to outlast the capital flight, shall we say, that is enabled by cryptocurrencies. And there's an important point to be made there, is that paying your taxes and the willingness to pay taxes as expressed by the public, to me, that's a metric of their approval of what you dedicate the funds to. See, if you're having a lot of trouble collecting taxes from your people, it might be because you're utilizing the taxes to sustain a 2-decade-long war against a faceless enemy that's cost the lives of millions of people with no legitimate benefit to the average person of the United States or our state or local economies. As a matter of fact, much to the detriment of them. Because as you've scoured your books for programs to slash and corners to cut and so on and so forth, the state's needs are being put on the back burner while we're putting up front this whole intervention in Syria and the bullshit that we did in Libya and the shit that's going on in Iraq and the shit that's going on in Afghanistan and Somalia and Egypt and a dozen other places that we have absolutely no business being involved in whatsoever. I think that as long as that threat exists over people's heads in other nations, cryptocurrencies are going to continue to flourish. And that until we see a shift away from that prioritization of war and killing other people, in the case of national governments, I'm going to predict that we will continue to see people trying to find new ways and utilizing new ways to avoid paying taxes because they simply disapprove of the utilization of the money. And frankly, the tax burden experienced by the average person today is entirely too high. You know, if we were to dial it back to 1900 and present, you know, the average person on the street with your tax burden, they'd be looking for their gun, their weaponry, and be like, "All right, let's go to DC. Got to burn the White House down again." Because they apparently didn't figure it out the first 2 times we did it. I mean, people forget that actually happened. The White House has been burnt twice. Not once, twice. And it was not accidental either time. It could happen again. I mean, I'm not encouraging such a thing, but I'm just saying that if the level of disapproval hits a certain point, that could be a foreseeable outcome. Just saying. And it is with that in mind that we are going to be closing out this episode. I certainly do appreciate your support and your listening. We will be back again on Friday at 8 p.m. Pacific Standard Time. We'll be keeping an eye out on what's going on around out there in crypto land. I mean, we're seeing a little bit of pullback on Verge, but I don't see that lasting very long. I mean, if you really look at that chart, it wants to go up. You know, I mean, it might be in a weird trend right now, but we've seen this all across the altcoin markets. You know, it happens every time they talk about doing a Bitcoin fork because everybody wants to consolidate as much value into Bitcoin as they possibly can when that happens. Because then the exchanges that are honoring the altcoins being spun off of Bitcoin, however much volume you're holding of regular Bitcoin, you'll be redeemed on those exchanges of the new coin. And that's fun. But the impact on the altcoin market kind of sucks because the prices go down. I don't know. I expect that once this kerfuffle is over, that we will see Verge and other altcoins of public utility hop back through the roof again. It's something we've seen before, and I expect we'll probably see it again. This is crypto. Pretty much anything can happen. So yeah, we will be back again on Friday. And so until then, I want you all to trade safe, do your homework, and watch out for your bunghole because nobody else is going to do it for you. And as far as a last dance, I hadn't actually picked one. So, oh jeez, New Holy War. That'll be our last dance for the night. Thank you again for listening, and you all have an excellent evening.